Make sense? Okay. Right? No, but that's not sharing. Why it's not sharing though? Oh, yeah. Okay, sharing. Sharing. Okay. Put all that in. Okay. You closing it? Yeah. Okay. Close this window. Yeah. Same part. This is circular window there. What is orange window? Yeah, not too sure. Oh wait, no, it's because we were. I think it was extended. You know. Okay. Okay. Yeah. Let me check out this. Yeah. Put one side. Yeah. Please move this. What? Do you want to change that? What's this one? This way. Is this window away from the? I think because you extended just now. Let's check. Okay, PC screen, right? Yeah. Sure. Is it right? No. Really, you were not sure. Okay. What's this window away? Not sure. No, here. It's fading off. It's fading off. Okay. Oh, I think it's. Yeah. You sharing this or sharing chat? No, I'm sharing. Can you reshare this? Or like share again? Okay. All right. Yeah. Okay. So, yeah. I think then you can just press left, right? Okay. Okay. Thank you.
Okay. Good morning, everyone. I think some women forgot the break, etc. But I think it's great that you guys have lunch here. So enjoy your food while you listen to me, everyone. I hope you can multitask a bit and able to catch some of the key points I'm going to highlight today. It's going to be something exciting that I'm going to share. So hope the food is good, faster eat it, and then we can also get into the meat of what we're doing today. Right? So first of all, introduction. My name is Marcus. I'm from Société Générale. We are a French bank, so we're like the DBS of France, etc. All right. Like Asia, we're more of an institutional bank, not a retail bank. All right. So we're an investment bank in Asia. We do issue structured products in Asia. They are listed on the Asian exchanges. So we have warrants listed on the TWT listed on the Hong Kong Exchange, and we do have the DLT listed on the SGX securities market. And that's what I'm going to talk about with you today. All right. But first, before I start, I think we've had a whole morning of reads. It's very exciting. I do have this to start my portfolio as well. All right. It's really, I think, quite a good time with the Fed rate cutting coming on, and as well as to build your income side of a portfolio, right? With now OCBC, UOB, all interest rates, high yield account, supposedly high yield, all like only 2% now, only, or 2 to 3%. Last night I just saw OCBC cut rates again on their their 360 account. So REITs is definitely a very appealing choice for those who want to build your income side of a portfolio. All right. But for me, what I truly believe in is that for every investor, you cannot just be one-sided, one-dimensionally. All right. You cannot just be all about yield. Nor can you be all about growth. Or can you all about just buy and hold and don't look at it forever. All right. You must be a certain dimension, different dimensions, depending on the market condition, to adapt to the market, whether you are a long-term guy, short-term guy, whether what instruments you're using, it has to be able to cater to the current market conditions. You have to have the flexibility to be a good trader. All right. So I like to use this anecdote, like my dad. My dad is a long-term buy and hold investor, and it served him well over the long run. Flipping properties, the stocks he's been holding still up, DBS, OCBC, UOB are still giving very good returns. So my dad is always pride himself that he's a buy and hold investor. All right. But now and then, here and there, I will always hear from him. In the last 2 months, he said, boy, I made 16 trades in the last 2 months, and I made 20K already. On 16 trades, just trading in out. I see where the big boys are buying, and I trade inside a bit. Then I faster out. Then I made 20K already in the last 2 months. I was like, Dad, I thought you always say you are a buy and hold investor. You're not gonna like, you don't 炒股 one. Then like, hand a bit itchy lah, hand a bit itchy. And I think the market quite good for now for a bit of short-term trade. But don't worry, I thought very fast one. I thought very fast. I retire already. I will make sure that I'm going to kind of support me. Don't worry. It's just a 100K play money. Okay, I will get it now and then. Every year I'll get one period of a year. After that, trade for 2 months, 3 months, then you go quiet already. Okay, so for me, I always believe that when people tell me that Singaporeans are all rich investors only, or Singapore are all buy and hold investors, I always say I don't believe. My dad is a case in point example, a very good example where you can be more than just a buy and hold investor. All right, there's always a side of you of every investor where you have their long-term buy and hold portfolio, TPS, OCBC, UOB, REITs, etc. for the yield. But there are also that growth side where they touch maybe US stocks for the growth, etc. But also the side of them that maybe itchy fingers or not, but really got market opportunities, but they'll come in and trade. All right, for a few days, for a few weeks. He said he buys Singpost for 2 days, etc. Made $2,000. Okay, well done then. Okay, but just be careful. Okay, I really cannot support you already. Okay, you have to support yourself. Okay, so I think that even though there might be a lot of you here who are rich investors, I know all of you are here for the 3 panelists just now, etc. Rich investor, but I'm pretty sure at some part of your investment journey, there is a trading side to it. Okay, that one is inevitable, right? I'm not saying that trading is bad, but I'm saying that it is a healthy part of your overall portfolio if you know how to manage your risk well. All right, be like my dad. I'm pretty sure he's a very disciplined guy. He's really provided for my family and I. So I trust him to manage his well. When he says down, he really down. Okay, he don't buy and hold onto losses. Although he's still holding on to venture corp for them long already. Okay, drop until then crazy. But he says, don't worry, it'll come back one day on a lot of cash. Okay, but I trust him to manage when he's trading. So the 2 cats. One is investing cat, waiting for venture to come back. One is the trading cat, when he really down, he cut loss. Okay, so my job here today is to share with you, to bring out that trading side of you, and to help you look at this product that we have that's listed on the SGX called the Daily Leverage Certificate. It is a very efficient and effective instrument for you if you are tapping on your trading cat any of these days. All right, markets have been quite volatile. All right, markets have been quite volatile since the Liberation Day. So I think that's what also re-ignited my dad. Okay, market is there. ETS dropped for 14-15% a day. Okay, maybe market is opportunities to trade in the short term, but maybe not long term because you don't know how the uncertainty will play out, the tariffs, etc. Whether Fed already cut rates or not. But my job is to let you know that this product called Daily Leverage Certificates listed on the SGX securities market that you can use when DBS drops 14%. I will go long on DBS for that quick big cat bounce back rebound. All right. So that is something that I want you to think of. The DLCs, when you see any volatility in the market that you want to use to capture short-term trading opportunities in the market. Okay. So we have listed these DLCs on the SGX since 2017. All right. It's not something new in the market. It's been around forever, but I'm pretty sure a lot of you have not heard of it yet. All right. Because this product, yes, it's quite a niche product. It's a trading instrument, but I think it will have served you very well in your overall portfolio. Okay, so this DLC have been listed since 2017. We have expanded the shelf over the years since 2017 from just 10 DLCs to now over 200 DLCs listed on SGX. It's a leverage instrument, all right? So it's a fixed daily leverage, all right? So like a leverage and inverse ETF. I'm not sure if you are familiar with that, ETFs. The DLCs have exactly the same kind of payoff as a leverage and inverse ETF. All right, your TQQQ in the SQQQ in the US, the Project Ultra, NASDAQ, leverage and inverse kind of products, the DLCs have exactly the same kind of payoff, but we can go higher in terms of leverage. Leverage and inverse ETFs are typically 2 times or 3 times leverage, but for the DLCs, we go up to 5 times or 7 times leverage. All right, so we have 3 times, 5 times, 7 times for you to choose from. So you can always adjust accordingly. For those that you want a bit more conservative, maybe you can choose the 3 times, but those of you who want really an intraday trade, or a very quick one, 7 times leverage could be useful for you. All right, and the DLCs come in the form of a long and short instrument. All right, so you can either trade the bull markets or you can trade the bear markets. You can use the DLCs to profit from it. All right, in these kind of volatile times, the V curve that we saw Liberation Day down, boom, and then after that, go up again. These kind of instruments allow you to capture both sides of the market. All right, where you have a short instrument to capture any downside move on the underlying stock or underlying index, or even to hedge your existing stock portfolio. All right, so definitely a short instrument is very, very effective if you know how to use it correctly to navigate the market volatility. All right, so all the DLCs are linked to an underlying stock or underlying index. Right, so you'll track the underlying stock or underlying index daily percentage performance with the fixed leverage factor. And it's all traded on the SGX securities market. So you buy and sell the DLCs just the same way that you buy your stocks, your DBS shares or your OUB shares. You go into your POEMS3 account, you look for any of our DLC, the stock code, you will be able to trade them just like the same way that you trade your DBS shares or UB shares or in 100 minimum bought lot unit size. Okay? So it's easily accessible to you guys. You don't have to open a separate account. You don't have to open a SocGen account. Remember, you can trade through any regular stock brokerage account, but of course you will choose POEMS, right? Because you're all here today. All right? And also SocGen, we are the issuer of these DLCs, but we are also the liquidity provider. I can hear a bit of quiet now, so I think everyone, this side has got their food ready. Okay, this side, wait a while, okay? I think coming ready. Okay, coming ready. So we are the issuer of these DLCs, and it's all we listed on the SGX. We will also provide liquidity on all our 200 DLCs every day. In the bid and ask prices, bid and ask volumes, we're providing liquidity over there for you to buy and sell the DLCs. So you don't need to worry about liquidity on the DLCs. It will always be there during the trading day, SGX trading day, where SocGen, we are the designated market maker. We are obligated by the exchange to provide liquidity on all our DLCs during the day, trading day. As long as the underlying is moving, we will be providing liquidity in the bid and ask prices, bid and ask volumes. All right. So this is our range of DLCs. We have been expanding over the years to give you more access. So a lot of people also say, Singapore is only about the Singapore banks and also about the REITs. All right. But I think the exchange, as well as together with their issuers, have really come up with more value propositions for investors beyond the Singapore local stock market. All right. To allow you to see that Singapore is not only an international hub for trade, but it's also an international exchange, which allows you access to many regional stocks or markets from the comfort of your SGX securities market. All right. So the DLC is giving you exposure to Hong Kong market, to US market as well, besides the Singapore underlyings. All right. So on indices wise, where we go up to 7 times leverage, 7 times long, 7 times short DLCs, we have the Hang Seng Index, which has been really, really exciting this past week. All right. It's firmly above the 24,000 level now, Hang Seng Index. All right. Hong Kong market is back. China market is back. All right. So I think that's why the DLCs have also seen quite a nice uptick in terms of our turnover and liquidity because of the Hong Kong market is back. All right. A lot of people use our DLCs to trade the Hong Kong market because it's more efficient. So this is something that will be very interesting for you if you're looking at the Hong Kong market. Okay. Hang Seng Index above 24,000, next target 25,000. A very nice trading range over there if you want to use the 7 times long Hang Seng Index DLC. Or even if you think it's a resistance, you can come back down, you can use the 7 times short DLC. But we have Hang Seng Index, Hang Seng Tech Index, as well as the Hang Seng China Enterprises Index. We also have the China Hong Kong stocks, so the China tech giants. So your Alibaba, Tencent, Meituan, Xiaomi, which has been a star performer. We have the 5 times long and short DLCs on the Hong Kong stocks as well. Singapore ones, we have the MSCI Singapore Index. We also have the main blue chip stocks, your Keppel Corp, Sembcorp, SIA, DBS, UOB, OCBC. So these are the ones that we do have 5 times long and short DLCs on them. So this is another area which I've been trying to convince my dad also. All right, support your son. All right, the 5 times long and short DLCs on the Singapore stocks. Okay, maybe you can try it out. These ones. Singapore stocks a bit less volatile, so maybe this is something that you want to consider. But you already trade Sembcorp, Chemcorp, etc. already. Why not try out the 5 times long and short DLCs on Chemcorp, Sembcorp instead? You could save on your commissions, right? You are 5 times less commissions, right? Because when you trade the Singapore stocks, you are paying commission on the full notional side. You want to pay $10,000 on Sembcorp, you buy $10,000 on shares, you are charged commission on that, etc. But you buy the Sembcorp DLC for a short-term trade, 2 days, 3 days, you buy $2,000 worth of the Sembcorp the DLC. You gain $10,000 exposure to Sembcorp, but you're only charged commission on that $2,000 only. All right. So that got my dad thinking a bit, but it's like, okay lah, wait, let me think about it. You know, my dad always, also for him to make any decision will take about 6 months to 1 year. Okay? You need to go and study, analyze it, dissect it, and then I have to spend a lot of hours educating him about it before he can even start. So I was like, leave it as it is. Okay, you guys check it out, try it out, check out my website, etc. Then you let me know when you make your first trade, and then we'll go and I'll buy you dinner. Okay? So Singapore underlyings, definitely, we have a lot of 5 times long and short DLCs on the blue chip stocks. And the US one, we have the NASDAQ, S&P 500, Dow Jones indices. So NASDAQ also this week, all-time high, NASDAQ. All-time high for NASDAQ. I don't know, I think consensus is that let's not chase the NASDAQ anymore. All right? Everyone I talk to is like, let's not chase the NASDAQ. It's really all-time high now. It's very high. But if you're going to buy and invest, is it really the right time right now? Okay, but even if you are, I would say you'll only be nibbling at the NASDAQ right now, all right? Because it's already at all-time high. Right? But if you're looking to trade the NASDAQ, you can use our 7 times long and short DLCs on the NASDAQ. The TQQQ or SQQQ in the US is only at 3 times leverage. But for us, we have the 5 times 7 times leverage on the NASDAQ, S&P, and Dow Jones. What we recently introduced last year was the single stock, US single stock DLCs. All right, for those of who are perhaps a bit more of the younger generation, they are only looking at US stocks now. Okay. Apple, Tesla, Nvidia, they're only looking at the US stocks. All right, so we had to diversify to give exposure to the US stocks. And so we did the Magnificent 7 stock US stock DLCs last year. All right, so this one, the Mag 7 stock DLCs, we listed it last year on Tesla, Nvidia, Apple, Microsoft, Google, Amazon, Meta. We have 3 times long and short DLCs on the US stocks. This is a very interesting shelf, a very interesting launch for us because it gives you Asian hour exposure to the Mag 7 stocks. All right, so it's definitely very unique proposition, the first in Asia, right? Where you have a 3 times long, 3 times short instrument available for you to gain exposure to the US stocks during Asian hours. During Singapore market time, 9 a.m. to 5 p.m., you can trade Tesla, Nvidia during Asian hours. All right. So any high impact news during Asian hours, US, China, Xi Jinping and Donald Trump start to fight again. Any big moves in the market during Asian hours, you can use the 3 times long, 3 times short US stock DLCs. All right, so I mentioned that the DLCs are, I'm trying to hear some noise on the left already, so I think the food is arrived at the left already. Okay, that's great. All right, so hopefully after everyone get their food, we can focus. All right, so the DLCs are like a leverage and inverse ETFs. Okay, the payoff is exactly the same. All right, but we can go higher in terms of leverage, as I mentioned. So the DLCs, the main formula, very simple formula, is just this, where the daily percentage performance of the underlying asset multiplied by the fixed leverage factor, whether it's 3 times, 5 times, or 7 times, will equals to the daily performance of the DLC. All right. So for example, over here, if DBS is up by 2% on this day, day 2 versus day 1, all right, on a close-to-close basis, up 2%, my 5 times long DBS DLC will be up by 10%, while my 5 times short DBS DLC will be down by 10%. All right. So your gains are magnified, but if the direction is wrong, your losses are also magnified. All right. So take care of it. That's what leverage is about. All right. Okay, everyone's awake now. All right. All right. No food coma. Huh? Everyone's awake now. Okay. So if so if we are looking at the short side, okay, if DBS was down by 2% instead versus its previous day, then my 5 times short DBS DLC will be up by 10%, while my 5 times long DBS DLC will be down by 10%. So as simple as that, every day you will get that 5 times performance of the underlying stock's daily percentage performance. All right. So you can see over here now that this is not an option, not a warrant. Okay. So this is more like a leverage and inverse ETF. There is no optionality impact. There is no strike price. There is no time decay. There is no implied volatility. There is no in the money, out the money kind of concept. Which strike should I choose? Etc. This is not a warrant. This is not an option. Okay, just to be very clear, this is not an option type product. All right, it is more like a fixed leverage and inverse ETF, but in a certificate structure where you get that fixed daily leverage of the underlying stock or underlying index daily percentage performance. Okay. So this is an example of our Alibaba long DLC. DKPW. So all the DLCs will have a 4-character stock code. DKPW is the one for this Alibaba long DLC. All right. So this is where the 5 times performance is. All right. Alibaba was up by 3.5% on this particular day, on the 14th of March this year. And my 5 times long Alibaba DLC was up by around 17 to 18%. All right, so that's where the 5 times performance is. It's a 5 times long Alibaba DLC, so it gives you that 5 times performance of the underlying stocks, 80% performance. All right, so it was up by around 17 to 18% on that particular day, and intraday, it was up trading at 92 cents, up 18% versus its previous day close. 5 times that of the underlying stocks, daily percentage performance. So you can see clearly, right? How does the underlying move? Underlying move 1%, my DLC will move by 5%. Underlying move by 2%, my DLC will move by 10%. You can see that linear movement, all right? Compared to option type products like warrants, you won't be able to really see it because unless you are really very good at Black-Scholes module formula, which you will never be, all right? You cannot really see that kind of thing. So that's where the transparency of the DLCs is why the DLCs is becoming more and more popular among investors in Singapore and why fixed leverage and inverse ETFs are becoming more popular globally, all right? So the name of the DLC, you can see, they will always start with the underlying asset, right? So over here is Alibaba long. So just give you exposure to the Alibaba stock listed in Hong Kong Exchange, all right? You'll start, the name of the DLC will always start with the underlying asset it tracks. Whether it's a Hang Seng Tech, whether it's Alibaba, you'll start, followed by the leverage factor. This one is a 5 times leverage instrument, and it's a long DLC. So if you are bullish on Alibaba, you will buy the long DLC. And then SG does not stand for Singapore, right? SG stands for Society Generale. We are the issuer of these DLCs, and then followed by the expiry date of the DLCs in month, 8-year, month date format. So this DLC will expire on 13 November 2025. Right? Technically, the DLCs don't need an expiry date. All right, because like leverage and inverse ETFs is all open-ended. Your TQQQ, SQQQ in the US are all open-ended. You don't need an expiry date. But unfortunately, due to some regulations in Singapore, we do have to have an expiry date for our DLCs. It can be 1 year dated, 2 years expiry, or 3 years expiry. All right, it's always longer dated. But honestly, whatever there is the value of the DLC on the 1 day before their expiry date, we will just cash settle back the DLC back to you. All right, for warrants, for options, if at expiry, you know, if it's out of the money, then you get nothing. All right, if you get in money, then there's a formula to calculate. But for DLCs, no such thing. All right, you will just everyday track the underlying with the 5 times performance from the listing date all the way to the expiry date. And whatever the value is of the DLC on the expiry date, say it's at $3 on the expiry date, we will just cash settle back the $3 to you via the SGX CDP. And then hopefully you put the money back into the next 5 times long Alibaba DLC. All right, we'll always issue a new one before it expires so you can migrate your position over if you want to. All right, the long-term goal, of course, with SGX is to remove this expiry date because the DLCs don't need an expiry date. It doesn't affect the performance of the DLC. For warrants, for options, there's a time decay. You know, the closer it gets to the expiry, the more the time decay will accelerate, and then in the end, the DLC could be, the warrant could be worthless if it's out of the money. But for the DLCs, the time to maturity, whether is it 1 day before or whether is it 5 days before or 1 year before the expiry, it doesn't affect the value of the DLC. Okay, so there's no time decay element on the DLCs. Okay, that's the long DLC. The short DLC, Alibaba 5 times short Z7MW. This one will move inverse with the underlying stock. If the underlying stock goes down, the value of this Z7MW will go up, right? So of course, on that day, Alibaba was down by 3.7% on this particular day. So my 5 times short Alibaba DLC was down by 17 to 18% that day. All right. So your losses are also magnified if you get the direction wrong. Okay. So, but if instead Alibaba was up by 3.7% on this particular day, then this Alibaba Z7MW will be up by 17 to 18%. Okay. So you can use the short DLCs to navigate the any short-term correction or any downtrend in the market. You can use the short DLCs. And another reason why I always say we're going to short the market, for those of you who are more active, all right? For those of you who are more active and you're more sophisticated, you know how to short the market, you want to trade both directions of the market, it always pays to use an instrument to short the market. You should never be short selling the underlying stock or short selling the market, right? Naked short, right? That one, when you short sell a naked stock, short sell a stock that is like a DBS stock or like a Sembcorp, your risk is unlimited. All right, your potential loss is unlimited, and you could even owe more than your invested amount. All right. like if you trade CFD, you could also owe people more than your invested amount. If the underlying stock move 50%, 30% against you, and you're holding a naked short, or you're holding a short instrument, times by 5 times is 150% loss. All right, you can lose more than your invested amount. All right, you might be expected to owe the broker that extra 50%, 150% loss, so you owe the broker extra 50% loss because of your naked short position. All right, but if you're using a DLC, all right, your maximum loss is capped at 100% only. Even if the underlying move 50%, times by 5 is 250%, but your maximum loss is only capped at 100%. All right, and for when you're shorting a stock, if the underlying goes up against you, a stock can go up against you infinity. All right, a stock can go 300% up, 400% up against you. All right, so that's where when you're using a short, you're going to short a stock, always use an instrument that can cap your risk. For the DLC, your risk is capped at 100%. You'll never be expected to owe the broker more money, even if the underlying moves more than 100% against you. Okay, so when you're shorting, always use an instrument because that limits your risk. Because on the shorting, you think about the risk is really unlimited. A stock can go up 200%, 300%, 400% against you, and then you'll be naked short. It's very, very terrible. Okay, so shorting, always look out for an instrument, and the short DLCs present a very effective, efficient instrument for you to short the market, for those of you who are more sophisticated. All right, so the DLCs I mentioned are short-term trading instruments. All right, it's not a buy and hold instrument. Buy and hold, please follow the advice of the previous panel. Go the REITs, the yield is great. All right, but if you are looking to trade, all right, DLCs is a short-term trading instrument where you can use it for day trading, for swing trading, or even for short-term hedging purposes. Okay, so for example, this 7 times long Hang Seng TECH DLC WYHW. All right, for this, Hang Seng TECH is one of our most popular underlines for the DLC because it's quite volatile. And with 7 times leverage, you are easily looking at double-digit gains or losses every day. Right, so it's perfect for those who are intraday traders. Okay, so this DLC, 7 times long Hang Seng TECH WHYW, was up around 17% that day on the back of Hang Seng TECH gaining 2.38%. Hang Seng TECH gaining 2.3% on a daily basis is very normal. Okay, so there is a lot of trading opportunities for a day trader on this. If you give them that 7 times leverage, double-digit return, 17% in a day is damn good already. All right, you can buy in the morning at $1.90 for this DLC and sell it at $2.30 in the afternoon by 2 p.m. and lock in the profit and call it a day. So there are a lot of day traders on the DLCs because, again, I mentioned the cost efficiency is there. If you go and buy Hong Kong stocks, and trade intraday, you'll find that your commissions and your exchange fees will really eat up into your returns. But if you use the DLC to trade Hong Kong stocks on an intraday basis, in out, 2-3 trades a day, it's a lot more efficient as compared to the buying of Hong Kong stocks itself. Okay, and swing trade. Swing trade is where the DLCs work best. All right, for a strong trend, the DLCs can give you more than the leverage factor returns. Okay, because of the compounding effect, which I'll touch on later. But a lot of people in Singapore also like to trade the DLCs for that nice one good trend. All right, one good trend. I don't know if you know our dear Philip Remiser, Joey. One good trend is all you need. Okay, one good trend, and then the DLCs work the best if you manage to capture that one good trend. OZDW, this Meituan 5 times long DLC, gained 51% in this 5-day trading period. All right, 5 days only, 5-day trading period in May earlier this year. Meituan gained 9% in this 5-day trading period, and my OZDW gained 51% during that 5-day trading period. 5 days. If you manage to capture a nice uptrend like Meituan and you bought the 5 times long DLC Meituan, you'll be sitting on 51% gain. Okay, for those of you who are, sharp, you could see that sometimes, underlying stock is up 9%. Times by 5 is maybe about 45, 47, 48%, right? But my DLC gave me 51%, right? There is that extra few percentage gains, or can be even more, if you manage to capture a nice trend because of the compounding effect, right? In a nice uptrend, the compounding effect can give you more than the 5 times leverage factor, right? This is a point that I will touch on later, but that's where DLCs work the best. If you manage to capture a nice trend for that few days or a few weeks, all right, you will be able to see that you'll get more than the 5 times leverage. You'll get exceptional gains from that. Okay, so for DLCs, please note intraday trading, trade it overnight, a few days or a few weeks, but you find yourself holding the DLC for more than a month or 2 months or 3 months, please remember what I said, that you need to exercise your discipline. All right, you need to cut loss. Right, you should not be holding the DLCs for 2, 3 months or even a year. All right, it's a short-term trading instrument. All right, so remember what my story about my dad and I. Remember you must really zao. Okay, remember learn how to zao. Even if it means a loss, you have to learn how to zao. Okay, hedging. Okay, hedging. You can also use it for short-term correction on the underlying stock. So Apple, I'm sure a lot of people hold Apple stock as their overall stock investment portfolio. This is not Tesla, sorry, it's Apple. Okay, Apple's 3 times short PODW. Right, it gained 24% in this 5-day trading period. All right, when Apple stock fell minus 5% earlier this year in May. All right, Apple stock fell 5%, but my 3 times short Apple DLC gained 24%. All right, so this is where you can use the short DLC on this Hong Kong stock, US stock, Singapore stocks to be able to make some gains to offset your paper losses on your long-term investment stock portfolio, because you're not going to sell Apple, you think you're going to grow even more stronger, right? Or your DBS shares, you're going to grow, going to keep it for the yield, etc. But you see a short-term correction coming. You could use the short DLC to hedge your overall stock portfolio position, or you can use the index also. If you think Hang Seng Index is too high already, or STI is too high already, or Nasdaq UI, you can use the short DLC to hedge your overall investment portfolio in the short term. Okay. So I'll go into a bit about the US stock DLC because it's something that's very interesting that we launched. But I'm pretty sure most of you here should be more interested in our Hong Kong stock, US, Singapore stock DLCs. So that one you can find it on our website. You can visit. I think most of you got a flyer. You can see our website. There is a full list of DLCs on our website later. You can see. All right. But the US stock DLC is something interesting that I really want to share because it's something that we launched recently. And it gives you that Asian hour exposure to the Magnificent 7 stock DLCs. Right, so this is our shelf right now. 3 times long, 3 times short DLCs for each of the next 7 stocks. All right, Tesla, Nvidia, no surprise, is our most popular underlines for the US stock DLCs. Everyone is just trading Tesla, Nvidia. Nvidia just made an all-time high as well, and we did see quite a lot of shorts coming in on the 3 times short Nvidia DLC. Tesla Robotaxi event, we saw a lot of 3 times long coming in on the 3 times long Tesla. All right, this is not financial advice, no recommendation, but this is just what flows have been. Okay, so the stock codes are there. So if you want to long Tesla 3 times long in an SGD currency, you can choose the TSYW. Right? If you want to short Nvidia in the US dollar currency, you will choose NVUW. Okay, so this is how you would. These are the stock codes for the Max 7 stock DLCs. All right, so the US stock DLC, some people might think, okay, it's traded on the SGX securities market 9 a.m. to 5 p.m. But the US market is closed. How are you gonna track the US stocks? How does the DLC track the US stocks if the US market is closed? All right. So this is what I want to explain a bit about. The US stock DLCs, same as all our Hong Kong stock DLCs or Singapore stock DLCs, will track the underlying with that fixed leverage factor on a close-to-close basis. All right. So if the underlying stock is up, US stock Tesla is up by 1% on a US close-to-close basis, my 3 times long Tesla DLC will be up by 3%. All right, it will be up by 3% on the US close basis. You will have that basic fundamental principle of all the DLCs, whether it's Hong Kong stock, US stock, or Singapore stocks, is all the same. You will track the underlying stock with that 5 times leverage factor on the close basis. All right. So this one, this example over here, let's look at the US market close T session. And the far most left of the chart, you can see that the underlying US stock is closed at $100, and my 3 times long DLC closed at $1. All right. Then that's 4 a.m. in the morning, US close, all right? But come SGX market open 9 a.m. Singapore time. Let's say the underlying stock reported better than expected earnings results, right? Post-market announced very good results, the US stock, and it's up 6% as of 9 a.m. Singapore time. Right, this US stock as of 9 a.m. Singapore time, where is the price? What is this price? All right, in the recent years, there have been a rise of Asian hour trading of US stocks. Even Phillip also offers 24/7, 24/6 trading of US stocks. And some of the brokerages in Singapore also do offer that 24/6, 24/7 trading of US stocks. Asian hour trading US stocks. So there's actual price discovery of the US stocks during Asian hours that is happening, and it's rising in popularity in recent years. So you can actually see why is Tesla trading at 9 a.m. Singapore time, why is Apple trading at 9 a.m. Singapore time, even though the US market is closed. There's actual price discovery. So we track that price with that 3 times leverage factor. So at 9 a.m. Singapore time, let's say this US stock is up 6% already, and the Asian hour price is up 6%. So my 3 times long DLC will be up by 18%, right? Giving you that 3 times leverage factor. And if you think that this company reported very good results and I want to get in early ahead of the US market open, okay, I can buy the 3 times long DLC at $1.18, right? That morning, 9 a.m. Singapore time. And if indeed the underlying US stock continue to rise further, all right, up 10% by the time it reach 5 p.m. Singapore time, just before SGX market close, the US stock Asian hour price is up 10% already, from 6% up to 10%. Then my 3 times long DLC will be up 30%. Underlying stock up 10%, so my DLC will be up 30%. So it'll be trading at $1.30. So Jen will be market making at $1.30 for you to sell back the DLCs to us at $1.30. Right? So you bought at 118 in the morning, and then you sell back to us just before SGX market closed at $1.30 to lock in your profit of 12 cents for that day. Or when the US market is closed and you are trading during Asian hours. All right. But if you think that the underlying stock, US stock, will continue its bullish momentum into the US Open and maybe into the next few days, you can continue to hold on to the 3 times long DLC. All right. Right. After SGX market close, you can hold on to the DLC, but you must note that you cannot manage your exposure on the DLC. You cannot manage your position on the DLC when the US market opens that night, because SGX market is closed already. 5 p.m. is your last chance to sell back. If not, you must hold it overnight. Okay. But you cannot manage your position, but the DLC will continue to maintain its 3 times exposure to the underlying US stock overnight. So if overnight the US stock continue to rise further from $110 at 5 p.m. Singapore time to overnight 4 a.m. in the morning US market close, trade the stock is up even further to plus 15%, then my 3 times long DLC will be up by 45%. All right, to be trading at $1.45. All right, at this point, the value of the DLC is $1.45, but you can't sell back to stock yet. All right, you got to wait till the next morning, 9 a.m. Singapore time. If the stock is still trading at $115, then the DLC will be quoting at $1.45. You can sell back to us at 9 a.m. Singapore time, $1.45, to lock in your profit of $1.45 versus your purchase price of $1.18. All right, so on a 24-hour basis, that's how the US stock DLCs work. You actually get a 24-hour exposure to the US stocks, but you cannot manage your position when the SGX market is closed at night and the US market is open. But you can get in early ahead of the US market open at Singapore time, Asian hour time. All right, so this is quite useful in the case of high impact news during Asian hours that will move the stock price, earnings, results, etc. And you want to get in early ahead of the US market open. Or if you just want a no frills kind of way to trade the US stocks. You're not going to trade US stocks at night, all right? But you just want an instrument that can give you that 3 times exposure to Tesla, maybe for the 2 weeks or 3 weeks horizon. You can use the DLCs on the SGX as well, where you can trade it in Singapore dollar term. So Sing dollar all-time high against the US dollar. So you don't need to change your money into US dollar to be able to gain money exposure to the US market. You can just use these DLCs that are denominated in Singapore dollar terms as well. So you have that convenience as well as that efficiency to gain exposure to the US stocks. So this one is something that I'm trying very hard to convince my dad. He every day talk about Tesla, every day talk about Alibaba, but he just don't dare to go into US stocks. Say too much trouble. I don't really know the US market very well, but this Nvidia really very fierce, very good. So this DLT, US stock DLT is something that I'm sharing with him at this point. If you want a general exposure, 3 times leverage also, he also okay lah. 3 times leverage, not too bad. Okay, can consider. Right. So my dad is always with my guinea pig, my experiment for everything. Right. And this one I think he's quite interested, especially for a guy who is very focused on Singapore market only. He only look at SGX market. He never look at US, never look at Hong Kong. He just look at Singapore market only. Right. So but for him to know that there's an instrument there that gives him Alibaba exposure or Nasdaq exposure or Nvidia exposure, he does listen. But again, I said to convince him takes about a 3 to 6 month effort. All right. So another example, of course, intraday trade is the Tesla one. Last year November election, when it was clear that Trump is going to win already. You can see that Tesla shares during Asian hours was up 10% during Asian hours. And my TSYW 3 times long DRC was up 30% during Asian hours. Right? You will have missed out on this 10% Tesla share rally if you waited till the US market opened at night. But if you got it early during SGX market hours, 9 a.m. Singapore time, 10 a.m. Singapore time, you would have been able to capture part of this Tesla rally during Asian hours. All right, I'm going to close off soon. But on the compounding effect, it's a very important feature on the DLC, which everyone has to make to know, understand before you trade the DLCs. Okay, this is like a leverage and inverse ETF, so there is this compounding effect. Leverage and inverse ETFs also have this compounding effect, and everyone should understand about this feature. Right, this compounding effect can work for you in a nice trading market, but it can work against you in a sideways or volatile market. You can see over here on the table on the left, when the underlying moves 1% on day 1, 2% on day 2, and another 2% on day 3. So 3 consecutive days of gains on the underlying stock or underlying index. My DLC, every day I give you the 5 times leverage. So 5% on day 1, gains 10% on day 2, another 10% on day 3. Right, every day you get a 5 times performance. But cumulatively, you look at the underlying was up by 5% over the 3 days. But my 5 times long DLC gained 27%. 5% times by 5 is 25%, but my DLC gained 27%. Where did the extra 2% come from? That's because of the compounded gains, right? The compounding effect of the DLC every day, your 10% gain on day 2 is based off a higher base, your 10% gain on day 3 is based off a higher base. So you get the compounding effect and you can get more than the 5 times performance if you manage to capture one good trend. Alright, so that's where the DLCs work best for you in a nice trading market, right? Where you can get more than the 5 times leverage, and that's what a lot of the people in Singapore like for the DLCs is this compounding effect. Alright, where you can schedule a nice trade, you can get more than that leverage factor. A key point, which I still like to talk about it because Xiaomi is still so hot. Alright, last year Xiaomi gained about 200%, right? But my 5 times long Xiaomi DLC in the 1 year horizon gained 4,000%. 200% on Xiaomi stock times by 5 is 1,000%, right? But my Xiaomi 5 times long DLC gained 4,000%. Alright, this does not happen every day, okay? I think by the first 50% gain, you will have cash out already. Alright, you have like, okay, start back already, got it. It's already, like my dad, it's already, okay? Okay, it's not realistic, alright? But that is the potential of the DLC, where it can give you that very nice compounding effect on the underlying stock. Alright? Testing. Can you hear me, right? A bit soft. Testing. Okay, yeah. Alright, so the compounding effect can really give you more than the 5 times leverage, more than the leverage factor if you manage to capture a nice trading market. But if you are stuck in a sideways or volatile market, that's where the compounding effect will not work so well for you. The table on the right over here, you can see that the underlying is up by 2% on day 1, down by 4% on day 2, but up by another 7.31% on day 3 to give a cumulative of 5%. But my DLC, every day I get a 5 times performance, so 10% on day 1, down 20% on day 2, but up 37% on day 3. Cumulatively, you only gain 20%, right? So less than the 5 times leverage factor. That's because of the compounding effect, where your losses on day 2 are locked in, and then your gains on day 3 based off a lower base. Alright? So it's important that when you trade the DLTs to have a conviction on the trend. Alright? You need to make sure that you have a good conviction on the trend. And that's also another reason why the DLCs are not long-term buy and hold instrument. It's a short-term trading instrument, because in the long run, markets are generally sideways at best. Right? So it will not work well for you, the DLCs, in the long run, because markets can be quite sideways. Alright, this is just a comparison of DLCs versus the other products out there, which I think I've shared a bit about. It's not a warrant. I stress the DLCs is not a warrant. Alright, so there's no optionality impact, etc. It's not a margin product like CFD, so you don't open a separate account. You just trade it assuming that you trade your DBS shares or UV shares, and your loss is limited to your investor capital, even if the underlying moves adversely against you. Okay? I just want to. Can we go to the website? Yeah. So this is our website. Okay. So this is our website, dlc.socgen.com. We are a bit tight on time today, but I encourage everyone to visit our website, dlc.socgen.com. Visit this website. This is where our full list of DLCs are on the Hong Kong stocks, Singapore stocks, US stocks. All right, so do check out the website, and also at the top right hand on the website, you can see there's a number, DLC hotline, 6226-2828. All right, so do give us a call. My team and I will on standby during HS market hours to answer any questions that you have on the DLCs. All right, so please feel free to give us a call. We're very friendly. We want to give you a refresher. Marcus, I went into your session on Saturday, but I was busy eating my food and I couldn't really hear what you said. Food was too good. I really like, and after I felt sleepy, so I really couldn't hear. But I caught the end where you say can call you, so I call you. Okay, yeah. So please feel free. We need to spend half an hour to give you another refresher on the DLC. All right, so please give us a call. We're always very encouraging after a Saturday event to receive the calls on Monday. We're very happy. And so Monday I always get into office early. Okay, so come in, give us a call, visit the website, explore a bit, and then any questions, how to select the DLC, how do I select the DLC, give us a call. Okay, or you watch our videos under the education tab. There is videos that I have. All right, how to select the right DLC for your target exposure. You can just watch the video. I'm very shy to talk to Marcus. I don't want to talk to Marcus. Okay, and then watch the video. Okay, watch the video. How to select the right DLC for your target exposure, and then you can start from there. Okay, so visit our website, dlc.socgen.com. Contact us if any questions. And remember, keep an open mind. All right, I know a lot of people are buy and hold investors. All right, you are here for the long-term yield. You want to protect your assets. You want to get a yield. Sure. All right. That's all fair and good, right? But if you ever feel like trading, or if you ever think there's opportunities in the market for short-term trade, I hope that you can think of the DLCs. Okay, and just remember, know when to sell. Okay, don't be greedy. Okay, all right. Thank you, everyone. We'll go on to the questions Q&A now.
Yeah, thank you, Marcus. All right, so in the view of time, we will be moving to Tahoe. All right, so like I mentioned just now, the same as just now.